Welcome to Daily Logistics. In this video, we are going to talk about international trade versus domestic trade and the risk factors involved. Without further ado, let's get started. First, we will check, what is trading? Trading is the buying and selling of goods and services. The concept of trading has a long history, passing the bartering system to current buying and selling system, which started way back in 6000 BC. With the time, people started to trade between countries to fulfill their needs and wants and to achieve competitive advantage even without knowing the theory behind. We will further dig into the international trade versus domestic trade and the risk factors involved. So, what makes domestic trade different from international trade? The trading within the territorial boundary of a country becomes the domestic trade, while the trading between countries is the so-called international trade. Even both concepts do the buying and selling. International trade is a massive area to be aware, unlike the domestic trade. In general, when you trade in the local market, you know your customer or the seller in most of the time. You have every possibility to track the seller if anything goes wrong. You can easily return the goods and request a refund if the product doesn't match your tastes. Also has the easy legal coverage in case of a dispute. Does it the same in international trade? Of course, it's not. The distance between the seller and buyer makes all the differences. International trade is massive and the number of logistics and other activities is involved. From the point of origin to point of destination, shipping lines, airlines, freight forwarders, NVOCC, international payment terms, Incoterms, international rules, regulations, guidelines, customs and border control bodies will be involved. Yet, international trade is essential to keep the world moving. Some countries have open trade policies and highly depend on imports and exports, while some countries prioritize local business interests. Since foreign trade occurs across countries, it has also known as cross-border transaction. The gross domestic production, GDP, of a country could decide up to which extent the imports and exports should have happened. Higher the imports compare to the exports of a country, higher the trade deficit becomes. This further impacts the foreign exchange as well as the value of the country's currency. The concept of entrepot was raised with the foreign trade. The transshipment ports or the hub port facilities further support the international trade. Now, we will check why international trade is important. The United Nations Conference on Trade and Development was established to support international trade, including the investments and developments. International trade opens the door for different products and provides choices for consumers to fulfill their needs. Further, it helps countries to import what they are unable to and costly to produce locally. The cross-border transactions bring the great advantage of efficient utilization of scarce resources in the world. The international market provides enough competition to supply competitive products at competitive rates which are fit for use. The competition creates opportunities to go green, be sustainable, or to be socially responsible to differentiate products. The consumer has the opportunity to meet their wants from the varieties of products. Countries enter into bilateral trade and multilateral trade agreements to gain more from the foreign trade. So, what will international trade could brings to your business? Is it worth going internationally with your business? The Born Global theory speaks on the companies which started focusing the foreign trading. Uppsala model of internationalization, the eclectic paradigm and transaction cost analysis, the interactive network approach of the International Marketing and Purchasing Group, competitive advantage and absolute advantage are some theories speak ongoing internationally. So, how do you know whether you should go international? Going international is not simple. You should analyze the market properly and identify the ability to compete in the international market. Know your micro and macro economy. Do a pestle analysis. The cost components involved are massive and your understanding of trade policies is essential. You should know to negotiate with your shipping company, freight broker, the airline for freight rates. You should know the duty and the taxes payable at customs and HS codes to decide the product price. Also know the available insurance and risks at sea. Further, apply the internationalization theories to support your decision. So, what are the international trade risk factors? And what could get in your way? It is very obvious the risk components involved in foreign trade is higher than the domestic trade. Higher the risk, higher the return you get. Don't forget, We will find main risk factors involved in cross-border transactions. 1. Cargo damages and/or losses are high during the transit. 2. Sending freight which is declared as prohibited goods by a country even due to the lack of knowledge leads to forfeit the goods. You will lose both invested money and goods. 3. If the payment is done upon receiving goods as per the agreed payment term, the risk of receiving payment is high with new customers. 4. The price of the rejected goods by the buyer. It will cost for reshipping. 5. Changes in duties and taxes, government regulations in importing country, may lead to losses as the final product price goes up. 6. Insurance coverage costs much more than the domestic due to the high risk in nature. Now, we will see 8 reasons on why you should engage in international trade. 1. Expand the market coverage and increase the market share of the business. 2. Ability to enter into markets with low or no competition. 3. Gain from competitive advantage. 4. Increase the return on investment. 5. Earnings from bulk production. 6. New product demands. 7. Absolute advantage. 8. Learn and adapt new and worthwhile technologies. So, the above provides you with a clear understanding of international trade versus domestic trade and the risk factors involved. There are risks involved when compared to domestic trade. Yet, the return is as massive as the risk. Don't be afraid to take risks. That's all for this video. Thanks for watching. If you like the content, consider subscribing. Let's meet in another